Oh my Lord, it's presidential debate Tuesday. By the way, I haven't been on the YouTube channel. We've been busy beavers with this market. Great stuff, gang. And last time we were here, talked about the positions. You can kind of just see and read through what we're attempting to do. These are add-on positions. Here's what we did last week. On Friday, in fact, we covered some of the put spreads and exited the option on the put spreads. We had half of those left. One of the other little sneaky things that you haven't seen since I've been on the YouTube was that we started to enter small just on Friday, getting into December bull call spreads in IWM. And we'll get into that in another day. But our current positions, we're still in Russell, on cloud. I still have a small position on September 27th. It's a bear unbalanced butterfly. 557 is the strike short. 543. Where are we today? 548. Those are still profitable. You know, markets just don't go down, as I was saying in the last video, all in 1 week. So we might get a little bit of a bear cat bounce in here. But markets, I think the reason I like the Russell is I'm starting to see a little bit rotation out of Qs. And if we are to see the Federal Reserve lower rates, it's not just the Russell going up because rates are coming down. Something that most people have not even discussed, that generally on an annual basis, the Russell has a seasonal low at the end of September, the second to third week of September. And we call it, believe it or not, drum roll please, a January effect, where people start to purchase going into small cap and out of blue chips. We call that the January effect. So I think we're going to get a double whammy. Another thing I like is this blue line is person's pivots. So you may be familiar with the indicator. That's why there's one red, one green, and a blue. And what this signifies is that the market on a quarterly outlook, this is a weekly chart with quarterly pivots, you'll notice that the blue line here is higher than that blue line higher than that. And we've got more of a rising trend. Now it's consolidated and it's been kind of vicious, but bottom line is we are still above a rising trend and bullish person pivot. So as long as the market stays north of the person's pivot, it's a good indication that we could see further increases out in time. The advanced decline comp ratio line on the IWM has been holding steady. There's nothing really to get excited about this on a weekly basis right now, but that's why we're starting to establish out of the short side and still kind of picking up a few trades along the way. What kind of trades? Last week, we've got filled on AMD in a complete position. I want to, as a disclosure, today, which again is Tuesday, I dumped some AVGO. The last time we did the video update, I said I gave a list of things that you could look at on a pullback if we got that pullback. And let's look at the complete pullback. This time I'll use the ES, the futures market, right? So we actually got a pullback all the way to 53.70 on Friday. It was just a nasty little sell-off. And that's why we decided as we were getting into and near support, it was a little too crazy. And that's why we said, let's get out of some of those, the downside puts. But I said, if we get a pullback, you may want to take a look at AVGO, which had earnings, AVGO. And I said, look for a little pullback on a AVGO. So it escaped I was looking around that 39 handle. There's 38. All of a sudden, we got a little buy setup as well. Look at the momentum of the volume. Now, you got three indicators here. You got on balance volume with a moving average. You got my proprietary momentum volume indicator, and the PMC, which is found on most platforms like Thinkorswim, Trade Navigator, and again, TradeStation, which we're using here. Moral of the story, we got a buy signal. The market gave us a nice little run to the upside. Midpoint of the gap, old lows, kind of that area. Trail to stop, I got jacked out on a trailing stop function. So it was kind of a swing trade on Broadcom. Do I think that Broadcom's going to zero? No. To be truthful, and forthright, I'm looking to be a rebuy down at around that 139 again. That would be my preference if we get some kind of a downdraft on Broadcom over the next couple days. We got CPI. Besides, again, the president debate tonight, we have CPI tomorrow, PPI on Thursday. And we have something else interesting that no one wants to really give a lot of credibility or at least popularity or presence to, which is the European Central Bank is going to come out with their announcement on interest rates and their assessment of inflation in Europe as well as their interest rate outlook. I expect them to hold. They're not going to rock the apple cart. Remember, almost every major country, Canada, we've had, let's see, New Zealand, Australia, Mexico, Bank of England, the Bank of European Central Bank, and even China have all cut interest rates. The only one that hasn't, Johnny come lately, Federal Reserve Jay Powell. They are suspected to do it as a token beginning of an easing policy period or era, and they're going to do it next week. And my guess is it's only going to be a quarter point. So the market should start to see this as a good thing. And moving forward, there's a couple things that I wanted to point out. I was asked, hey, do you cover commodities? I do cover commodities. I just don't trade them as actively as I do equities. Let's take a look at what's not going to be in the consumer price index tomorrow. Crude oil prices, but more importantly, the thing that we put in our cars, reformulated blend gasoline. Reformed blend gasoline is now at the lowest level after today's debacle that we've seen since May of 23. That's a big decline. Now, here's the thing. The numbers that are coming out for CPI is only going to reflect energy on average, the average price for the month of August. And if you take the high, if you take the low, and you say, what's the average? It's around 213. 213, the average price in the month of July was around 227. So they're going to massage this as crude oil and energy has helped decelerate inflation, and we should start to see, including food and energy component down based on reform blend gasoline. Natural gas is going up a little bit. It looks like it's trying to make a little engine that could bottom pattern. Obviously, it has been flatlined since almost July, so it's not going to really show any uptick in the inflation on the CPI component. Now, maybe it's rents. I'm not quite sure. I'm not going to get into the complete itinerary of what the CPI number is going to contain, but food's not all of that. I don't think it's going to have a food component is going to see a major shift to the upside. I don't believe that rents are going to see a major shift to the downside, but overall, if the month of August we saw a little bit of contraction in manufacturing, maybe steel prices came down a little bit. This number tomorrow could be a little cooler, thus really exciting the market to a degree. So that's my 2 cents based on looking at energy. Is the correction completely over? The month of September and October, generally we get a little bit more of a correction. One of the videos that I did, and I alerted you guys to, I said usually when you get a pop in volatility, you get a return or at least a retest of that, not the high, but if you recall, I said generally speaking, when you get that type of a swing of a pop in volatility, you get a retest within a few weeks. We did kind of get a little pop based on last Friday's debacle, but I don't think that's enough to do it. What would do it? Maybe some really bad directive talk from Jay Powell, like, yeah, we don't think we want to cut rates all that much, but we're going to do this one and then we'll be more data dependent. Maybe something like that. Maybe there's something else in the month of October. But for right now, there's a few things that I want to address. Energy is cheaper. I just pointed that out to you. We have the holidays coming up, and we've got this artificial intelligence play coming. There's talk between NVIDIA and AMD, which AMD might be outperforming or could outperform with the MI300 chip. For the record, here's some of the positions. We bought AMD last week, 36.52. There's my stops. You can pause the video. Here's our current positions. Boston Properties, British Tobacco, 9.5% dividend yield, long 34.85. This stock's been going up every single day this week. Alibaba, Amazon, MongoDB, Foot Locker came real close to stopping us out today. I think we dodged a bullet there. AT&T, Pfizer. So those are some of the names, and we're looking at PayPal to average in. We did buy, didn't get transposed from last week's action. We bought half a position at 69.35, working to add at 64.65. Amazon in half a position, looking to add. Here's Amazon looking to add another half position on a dip if it even gets there, and I don't know if it will. But I'll also light you up if energy goes down and we're getting into a seasonal aspect of the holiday soon. And now that Congress and Senate is off vacation and back in Washington, maybe there's a lot of different, let's call it budget proposals and other articles that need to be shipped overnight. Are they using FedEx, Courier Services, or UPS? UPS, 5%. I don't know if you guys knew this, 5% dividend yield. Now, I don't have phenomenal buy signals, to say the least, but what I have is an old high, old resistance, new support, and the monthly momentum was extremely weak on a bounce back. I don't know if you can if I can get this up in here for you guys, and you can see the little shadows. To me, that looks like we may have seen a capitulation of the downside near this support. So I wouldn't get wild and crazy and all in quite yet, but we are starting in the live trade room. I presented this trade to everyone today that maybe we should start dipping our toe in the water. After all, the last few days, there's been some accumulation. That's what the volume indicator is sharing with me, and the relative strength starting to get a little bit better relative to the S&P 500. So I think we could start to establish some long positions. I believe earnings is in the second week of October. Therefore, there might be two-sided trading. UPS on a 5% dividend yield with lower energies could see, at the very least, I wouldn't rule out a pop up to like 137. So I'd be also looking to scale in from a UPS perspective, some around 129 and change, and then as well as work some orders down if we get in this trading range, right? So you don't want to buy the high of a trading range until it breaks out, but you can buy a little bit here and a little bit there and get the best cost average price in. Another idea, if you're nervous about a complete debacle in the market, the October expiration monthlies, it would be, I think that the October, if I'm not mistaken, it's October 24th and maybe it's the October 25th expiration. You can buy the 125 puts for about $3 and start scaling in. Now, again, you got to be looking at buying a minimum of a 100 share lot purchase. So if you buy one option, it's a 100 share notional size, right? One option's 100 shares, notional value size. And then you can maybe scale in and buy 50 shares of stock and then add another 50, or buy 10 options and 1,000 shares. So that I think is a way to play the market in case there is some unforeseen nasty debacle. But the looking at that relative strength and also the seasonality with UPS, and it pays a 3% dividend yield, by the way. And if yields come down, the Fed cuts rates, T-bills start to see a decline in rates of return, some of these dividend yielders, which would explain why maybe British Tobacco at 9.5% is blasted off, which is why the newsletter, why we're have been recommending that particular trade. Another one that's a high dividend yielder, AT&T, very similar blast off. So it seems that certain dividend yielding stocks are catching a bid in this environment of stocks that may have underperformed relative to the market over the last 2 years, since everyone was in Meta, Apple, the heads of the five family, as I call them, right? So with that said, I think that other names that I gave out in last week's video, like Starbucks, look for the pullback, SBUX, just as a quick review. It looks like it should be coming back, and I'm not going to buy them. I'm going to hold off. Dave Nichols from Chipotle Mexican Grill is first week on the job. I'm not quite sure he can turn things around aggressively, and it's just going to cause everyone to want to go into Starbucks all at once. But I do believe that on any kind of pullback, we'll still look at an entry in that gaping hole, we call it gap, and look for the midpoint of that to get filled at one point. The other one was Best Buy, which had over-accelerated upside movement on its positive earnings. It's coming in and filling that gap. So again, for the holiday trade, we have some ideas there that I think can do well. As I said in the last video, hey, everyone's only shopping at Walmart and only shopping at TJ Maxx. Target had pretty good earnings. Guess what it did? It finally came back in and filled the gap. So relative weakness in some of these names I think could be all right. And then finally, in the discount merchandisers, $5 and below to me looks a little bit more attractive relative to Dollar General. But Dollar General is not going, it has not it has not increased its loss of value. In other words, it's kind of clinging to these like lows. So what I want to see here before getting and real excited about maybe a return to recovery is a little bit more positive volume and a little bit of improvement of that relative strength. Out of the names, 5 and below has a better shot at a recovery of filling its gap. Anyway, those are some trade ideas besides getting into Amazon and Apple. But once again, if you haven't given a try into the Algo, the live trade room, it's got some really neat stuff. I'll bring this into focus. This is the current window that's in the Algo room. The model was short the SPY, covered its short position, went long on Monday. The NASDAQ was short. I think you guys saw that. I was fully disclosed with that position. It covered it short, reversed, and went long. They both have emergency stops, but again, gap and overnight market conditions don't guarantee stop losses. Crude oil. This market, someone was asking, do you do cover commodities? We have crude oil model here. It went short, it covered a short, and went long in the after hours. It holds positions overnight. And the ES model for today, it's still holding went long right in the close. It's got a really, really close stop. That's the positions, and this is what everyone that's in our algo room or our live trading room can trade off of these models, which are shown the entries on the charts as well as the actual listing of the trades and their performances live in the position column there. Hey, thanks for watching. And again, as always, if you have questions, type them in. I'll try to address them. I addressed 2 questions. Do we trade commodities? We obviously have the crude oil market there that we follow. And as always, if you like what you see, give a thumbs up. And again, if you have any comments, definitely type them in and we'll get your questions answered. Thanks for watching. Until the next time, have a great evening, everyone.